Hey guys, how's it going? Welcome to Thursday's market breakdown. I'm still not feeling anywhere near 100%, so yeah, my brain is not as sharp as it usually is, so bear with me a little bit on this one. But yeah, in terms of higher time frames, obviously not a lot has changed since the last video. Price has now pulled up into this area of daily supply. We're potentially looking for the daily and 4 hour to roll over here and form a potential another lower high to come down and target this potential weak low down here. But we have to be aware that we have had a major sweep of liquidity of these lows here. We filled up more demand within this daily sort of FU wick, right? That sweep wick, and the weekly still bullish, so we could break out from here and get that longer term move. Or potentially, right, we could be playing within this daily high here, and this could be the daily low, and this could simply end up just being a minor daily lower high that becomes liquidity, kind of like the scenario we had over here, where that was the true swing high, that was the true swing low, and this pullback was just a run on that liquidity there. So potentially we could get something a bit similar and still run over. So kind of three scenarios there really. Most prominent one will be that we get a lower high and we run down. Next one will be that we run this liquidity, right? We push up a bit higher, reject something within here, and then form that larger lower high and come down. Or actually, we eventually break out and go up higher. For our chart, yeah, so we started to have a bit of sensitivity here. I believe this was on Tuesday, and we started to pull back, but we failed to really kind of break below that minor low there. Just grab the liquidity below there, and now we've pushed up higher to fill more orders up within the EQ of here, and we've now come in towards this wick as well, just during New York session today on Thursday, and we've seen a bit more of an aggressive sell-off. So for me, pretty much once we've got above the EQ of the range, sells a much higher probability. It's pro 4 hour and daily trend. It's in the premium. Obviously the longs you can still take intraday, but the shorts are kind of what really I would have my main focus on for those more higher probability entries, especially with kind of how choppy price action still is at the moment. Sells definitely have the higher RR potential in my opinion. So that's what I'd be focusing on. It would be nice to see a minor breaker structure below there if you are holding on to any shorts, to kind of then have the confidence to try and hold this down towards these weak lows, down towards here. Alternatively, right, you can see with kind of this internal structure, right, more kind of that larger 15-minute structure, that we are still pretty much bullish with this internal structure. So we may come up a little bit higher and mitigate something within these wicks before potentially seeing price start to roll over. Take a look at the 15-minute chart. Now for me, obviously I was out of this yesterday, so I've kind of just been going back over today and yesterday's price action. The 15-minute structure gets pretty messy, pretty confusing, because I think where we left it on Wednesday was around this section of price action here. So regardless of whether you had the M15 kind of mapped out the same way as I did at the start of the week, where I was essentially kind of viewing it as we had quite messy price action around here, and then we had this kind of one big push down. So for me, that was a very minor pullback. So obviously that would then be the swing low, not this, right? And then for me, you take the highest point before that low was broken. So that's why I picked that, and why we had such a large range. And I wasn't looking at kind of these swings here. That was all internal structure for me. So once we broke and closed up above that high, then, well, again, you have to take the lowest point, right? So that still became that low. Then we had a nice clearer pullback here, and then we broke up. It was a bit close, but on the data feed that I've got, maybe it's different on other data providers, but we just about had a closure above, which then gave me this as a swing low. So I'm more than happy with that, right? So regardless whether you were looking at this or here, at this point, your kind of structure should be your swing low, especially when we got up to here, right? So you should have either had that as your swing low, or really this as your swing high, and you viewed that up as one bullish push, right? Or if you had it the way that I was marking it out, as this was kind of occurring around the time, I believe, of the recording, because I saw that as such a sharp movement down and then a sharp movement up. I saw that kind of as a strong low, and also that was at least kind of, let's see, it was pretty much 50% of the move, right? It looks like price came down to the EQ and then pushed up higher. Yeah, as you can see, well below the EQ there. So for me, I kind of viewed that as a time as a decent enough of a pullback. And of course it's quite small, it's quite a small leg, but kind of when you get further into that run, right, we're quite far into the run now and we're approaching that 4 hour zone. That's often what happens, right? You get a bit more corrective, you get smaller pullbacks, so then you can get that quicker trend change, and then you start trending to the downside, ideally. Or of course what's happened, we build a bit more liquidity, and then hopefully maybe we're now coming down, which we'll obviously get to in a bit. So I think that's still quite valid, kind of how I've consistently been trying to map structure. But what that then means is during the Asian session, whatever that be, Wednesday evening going into Thursday morning, we then got that bearish break of structure here. We've got a pullback, and then we've got another bearish break of structure there. But then what happened? Price then switched bullish, right, again. So then you're looking for the high low, but then it switched bearish straight away again, right, and then it switched bullish again. So generally when you're breaking highs and lows and then retracing, not committing, obviously means you're in more of a complex range. But what it can also be a sign of is you've kind of got your structure or your swing points mapped a little bit too aggressively, a bit too near. So kind of, I guess if you had originally looked at it this way and you're kind of seeing the market be really indecisive and chopping around, and potentially you're seeing POIs, demand zones and supply zones getting smashed, you're taking a few losses or a few break evens, it's just confusing. Either sit in your hands, wait for it to sort itself out, right? So it's probably generating liquidity, which is what we can see ended up happening. Or maybe go, okay, I've been a little bit too aggressive in my mapping, kind of just scroll out a little bit and just look at, where are the more major swings in price. You can see here, that's a bit more of a pullback. That's a bit more of a one push up. And then all of this just becomes one complex pullback, right? Within this high and this low here. And then it can, help you to avoid potentially getting kind of caught up in all those liquidity sweeps and changes of what seem to be changes of trend within there, right? And this just clears it up a little bit. So that's kind of how I viewed it, because otherwise I think price action can get very, very confusing when I've been looking back at Wednesday. So I've kind of kept the structure mapping that way, just kind of keeping it consistent from how I believe I was marking this out as a swing low on Tuesday's video. So yeah, whether you kind of had it both ways, it doesn't massively matter, but it's just kind of a little learning point here. Again, speaking to myself here, right, as well at the same time, of just if it starts to get like that and it's not clear, one thing to do as well is, where are we on the higher time frames? Always jump up a time frame. Well, we know on the 4 hour we're in the premium, we're approaching supply, so shorts are in favor anyway. So if you just concentrate on those short plays, right, because even at this point, right, and push prices up, and then you would say, okay, well, we're bullish again because we've taken out this lower high. You can still look for shorts up around here to play the pullback, but with the idea that it could turn pro trend anyway, because where are you trading from? You're trading from 4 hour, almost steady supply up in the premium. So yeah, a few little key lessons there. If we're breaking highs and lows and we're retracing, we're stuck in a range, best to just try and trade the extremities of the range, or kind of play that bit of ping pong, or zoom out a little bit and just try and look at the larger swings in price, and then realize that the M15 may still be bullish, so on and so forth. And then that way kind of just be patient for a day or two until it clears itself up. Then we clearly get this sweep of that low, fail to close below, and then we get that big move up that fuels the move up to then clearly break that high. So then there's not real too much discretion or subjectivity of what the swing range we're playing them within. And then we get another pullback during Asia, which is the exact type of price action I like to see. Nice clean price action now, coming up into mitigating the 4 hour EQ. We get another push up around London, up into the highs, and then during New York we have now broken the low. So regardless kind of how you view that and how messy that kind of got, I would say now that pretty much all of you should be viewing the M15 as now bearish, as we have now had a closure below the swing low here, and we're coming off that 4 hour supply. All time frames are now really aligned for me. Shorts are becoming very high probability to look to try and play that move. But of course, like I said, don't forget we could push up higher, right, somewhere to mitigate something within this wick, or potentially this is where I'm not 100% certain on the daily swing points for me. I'm usually more inclined to view that as a bit of a daily swing point because it was quite an aggressive move away, almost pretty much came up to the EQ, right? But like based on this previous price action here, right, where we had a sweep of that high, we could see something similar where we do push up for higher for another few days before potentially rolling over. But for now, try and keep it simple. We're in a very clear 4 hour range. We're right up near these premium prices now. We're coming into clear areas of supply, right? This is probably the cleanest candle. This stuff not so much, but we know anywhere within, the daily zone essentially clears that out for us, right? Anywhere within that daily box, if we get those 15-minute changes of character, or more ideally, right, more confirmation would be that 15-minute bearish trend change, which is for me we have now had. This is becoming decent for looking for those shorts. So Yeah, I mean, today was this around, the London Knoll. We kind of had that change of character, right? It's a bit subtle, but you just have to keep your eye on these. So at the very extremity of the 4-hour zone, what did we have? We had that really nice clear M15 inside bar there. Price then came into it after the M15 break of structure. So a lot of confidence here now for at minimum, a 15-minute pullback, but ideally, looking to anticipate that potential trend change to make the M15 realign with the bearish 4-hour and daily structure. So what do we have? Well, price pulled back with a minor pullback, right, and then took that high, change of character, right. Just need to see a spike, a wick right above that high, which means now we have a minor low here. So when we take the low, we now have that change of character, which of course you can trade. It's obviously more aggressive, or you can wait for what we've now had, which is that confirmed trend change. Price then came back up to that decisional, and it's looking to try and come down, but of course price is pretty messy. We've still got plenty of demand zones which we're reacting off at the moment for price to fight its way through. So this is where still looking for those longs and playing them they're not very well priced, right? It's against the M15 trend now, but if you're in shorts, you can start to potentially look to hedge these and pay to the upside. I do have this M15 flip zone here, right? I've just taken the whole range, drawn this big box, but of course as well, you could refine it to the last sell before the buy candle there. So yeah, I've kind of just tried to really just concentrate on the M15 here, because I think, I was digging down into kind of the entries here on the M1, and it's, there are entries there and you can see them, but really I think the main lesson here is well, I've gone over them, right? I don't want to keep beating that to death, but shorts are always going to be, if you're confused, well, we're in higher time frames, shorts are going to be that kind of higher time frame pro trend, and also just try and play the extremities of the range, and then also, just clean up the structure a bit. Don't stick to this if you think it potentially doesn't make sense now, and you see that this range will clear things up a little bit more, then I think that's definitely a good learning point there, but we definitely have more clear structure to continue looking for those shorts. So that's kind of really, I guess, summarizing up the M15 price action, or at least the way I see it for the last few days. And I guess I've gone over kind of the forecast now for what I see at this stage. I'm still thinking shorts are the highest probability option. We obviously have all these reaction points that we can look at for looking for potential hedges. If you so wish to do so and trade counter trend, these are some of the POIs that we've had right there untapped from the last few days within the week. Obviously there are a few 4 hours that I haven't drawn on. Just reset this. You can see we're obviously reacting from this sell to buy here, but nothing really that major. We've got this range down here, and obviously this one at extreme, but I would expect that low to eventually go if price does make it down that far. So let's have a quick look at the M1 and see the price action today. So obviously we had that M15 change of character. This one price action was getting a lot cleaner, I think, today than yesterday. We obviously had this big build up of equal highs here, nice big sweep, and then these dotted lines are the M15 change of character, right, where we then came down. This was the last unmitigated point of demand, right, that broke those highs. Price came into it, had a pretty violent reaction, but it failed to put in a higher high, right, and then we broke the low. So essentially this whole buy to sell range, right, anywhere within there is a good area, I guess, to look to play that, that flip, play that failed reaction. Obviously you've got the extremity there, so that would have been a very, very clean limit order. So it kind of looks like, sort of a risk entry, but really it's just a much larger flip that you're playing, just because it's this big pullback. Let's have a look if there was a seconds entry within there, because there wasn't anything there on the M1 for me. Let's take a look. Okay, looks like there is. So the way I would have viewed this is that's kind of your last point of demand. Obviously price comes into it, tries to push up higher, we then break below, so then anywhere within this buy to sell range here would be, essentially where you want to get short. Let's see how big that is. It most likely should be less than 2 pips. Oh, maybe not. Let's see. Yeah, no, it should be bit tight, but yeah, pretty much there. If you enter on the distal, or just enter at market as soon as price pulls back in, and then you would have been in a very, very nice pro trend trade, and that would definitely be one that you're let me see, hang on, let's go back to the 1 minute. So yeah, to be fair, at this point you only have if I get the 15 up at the same time, so this is getting you're selling from here, right? So you're selling back into that M15 buy to sell candle as well, but in terms of management, right, you are selling from the extremity has been mitigated within that 4 hour zone, right? That M15 there, you've tapped into the daily as well. You're selling right in the premium. So if you've got in that great position, you do want to be trying to push this as long as possible, but obviously we don't get the M15 confirmed bearish until here, so potentially you may have wanted to take some profits around here. But yeah, you know, if you can do the hard work and get this well positioned, yes, price may come back up now to stop you out, so make sure you do pay yourself. But if you do want to kind of capitalize on those much larger swings, this is the type of area to do that. But obviously, of course, you know, it may take a little while before we start to go. But so far, the M15 has now aligned with the 4 hour daily. So yeah, a decent opportunity if you want to be that type of swing trader to try and leave a decent amount of volume on the run, because as you can see, we've pulled back up into this M15 area supply now. So yeah, hopefully that can continue to maintain that bearish order flow. So that's kind of the cleanest setup from New York. London, obviously it looks more like the longs are in play, but yeah, like I said, it depends on how aggressive you want to be. If you really want to be looking for longs, you know, when you're in 4 hour and daily supply in a premium against that trend, it's a hell of a lot more aggressive and not really something I would massively advise doing. Let's take a look at Wednesday's price action. There were a couple of trades, but yeah, really again, it depends on, you know, I don't want to dive too much into this just because the structure was a bit of a mess here, but essentially this area of supply was pretty nice, right? It mitigated, if I scroll across, this flip zone here, right, which took out this demand zone, that buy to sell wick there. So we came up, nice aggressive move away from it, right? And we built some liquidity. We switched bearish, but of course then it gets confusing because we're bearish again, and then we're bullish to come back up to this area here. But kind of one thing, or even if you view it as counter trend or pro trend, really good sign of then looking to get involved, even if you just see it as a day trade, is those aggressive moves in and out, right? Because you can see, right, how aggressive once price not only swept liquidity, but more importantly came up into that zone, because this here is what that buy to sell M15 zone is, and when price came up, right, it didn't actually touch it, so it was completely fresh, right? It didn't touch it during the Asian session, and then what happens as soon as it fills those orders on distal, boom, like straight down. Okay, now for me, this is where the cleanest M1 entry was, because as we came down, there was no reaction. We just smashed straight through supply, and then we came up. So that wick for me was not rejecting anything on the M1. So that was there was, you know, no flip there, and then we came down. So if you're just looking at kind of standard continuations, that would be your entry there. But there's one thing you kind of have to be always mindful of, and why, you know, I think the flip zones increase the probability of these continuations is, you know, you've got the unmitigated extreme up here. So it's kind of, you know, that 50-50 case of, are we more likely to come to here or up to the extreme? Now we know with the EU, it's, well, it's easy to kind of say with a pair like GU, we know a lot more it likes to prefer the extreme, EU not so much. But generally, if I see a clean flip, like if we hadn't have spiked through here, and if we had seen a very clean flip here, right, then I have a lot more confidence that it's not coming to the extreme. But when prices smash just straight through and it comes down like this, and now I'm looking in the live market thinking, you know, is this an area in which I want to put my limit? Well, because I haven't seen that exchange between buyers and sellers here, and we smash just straight through, then that makes me think potentially this could just be used for liquidity for price to come up to the extreme there. So that's why I just wait for price to come in and play the reaction, right? So you can go, okay, I have my two POIs, this one here or this one up above, and I'm just going to play the confirmation entry from either one of those. So obviously we start to react from this one, and we start to pull back, and then we make a higher high. So far demand is still in control, at least the most recent price action, right? You're looking for sellers to start stepping back in. Price comes down into, well, you could be looking at this whole range or the refined candle. It doesn't really matter. You should arrive at the same place because it stays bearish. Then it tries to go up, right? You see the demand stepping in. You see buyers trying to make that higher high. But then what happens? Price not only causes that reaction to fail, that's where your reaction line would be, but it also closes below or gives you that change of character below this internal low here. And then boom, you can sell anywhere within this buy to sell range. But obviously refining it to that extreme gives you a 2-pip stop. Really, really clean entry there. Not ideal. I'm not a big fan of entering around the London low. I can see they're about 10:30, and that's why it's quite choppy and horrible. But yeah, quite a reasonably clean entry from there. Just what I don't really like about it is just at that point structure is quite messy. But this is where, like I said, you know, if you know the higher time frames are looking a lot cleaner, you're within a 4-hour supply zone, pretty much a daily supply zone at that point. It's pro 4-hour daily trend, and you're at the extremity of this move here. You got a fresh M15 supply zone. You see the aggressive move in and out. You've now seen your flip. You've got that confirmation entry from this POI. You've got more confidence this price isn't going to come to extreme. Now you've stacked, you know, a hell of a lot more probability in your favor for the short. And even if you think it's counter trend, then you just want to go for a quick, 5-hour in and out. There you go. Or potentially you want to push it further, right? Even just down to the next swing low, you've got over 10R. Not bad for a what's that? Not even a couple of hours work, right? So that was quite a clean entry there. Just trying to think now if I kind of spotted anything too much else that I wanted to go over. The only other kind of one that I would think is worth mentioning is if you did clean up the structure, or you were a bit more conservative with your swing points and you looked at that as your M15 low and your M15 high, and then what do we get? Our favorite kind of type of price action, or it's a bit presumptive, but my favorite type of price action, I guess I could say, right, bang on New York. So open session timing, big volume stepping in. What do we get? We get a failure to close below a major low. So it's a sweep of liquidity, right? And then not only, let me zoom in on this so you can see. Not only do we get that sweep of liquidity, but we get a flip and a change of character. So there's the more sort of major one there, but if you're a bit more subtle, for me this is enough of a change of character where I'm just literally looking at the candles, right? Where you have the pullback with that inside bar, then the break of the low, and then price comes up, right? With this inside bar here, it reacts to this inside bar supply, right? So this being your supply zone here from this candle here. Price comes into it, it reacts, it fails to put in a lower low, so then it breaks up, so we get that change of character, and we get the failed reaction, right? So that's your change of character there. This now becomes your demand flip, right? So you can draw it from there, or obviously all the way down to the wick, and then boom, anywhere in here you can be looking for those longs, right? You don't have to jump down to M1, you can literally set an entry order in here, the EQ, wherever, and you're in a very, very tidy trade there. So let's take a look on the M1. Let's see what price action we got in there. So this would be price here coming into that M15 supply. Price reacts and then goes up with pretty much one straight push. So that would be kind of your M1 flip entry there. But its prices have come down a long way. To be fair, it doesn't really have to change trend. Yes, arguably, that's a change of character if price breaks that low, because all of these candles are all part of the bullish move. But that's a pretty straight clean push. So taking that kind of just limit order there is definitely more than valid. Obviously, you can see price does ultimately spike a little bit lower, but maybe you want to play the M1 confirmation entry. You want to get another M1 flip when price comes into here, just to show you that it is holding and it's not coming down to the extreme. Then you can see that actually it doesn't really give you an M1 valid flip, because the next area of supply is up here. So then the flip would be this point here, and this is your flip zone, which obviously price doesn't come back to at this point. So how could you have got in? Well, this is another kind of key. If you see a strong reaction like that, you can pretty much assume that intraday, right, you've got your flip down here, because it's likely, right, there's going to be that M15 pullback. Price has then broken it and come back in, so you can almost play that reaction without looking down. But if you're being purely in terms of an M1 flip, for me there wasn't one there. Let's take a look at the 15 seconds. I actually think it wasn't even that clean on the 15 seconds. But obviously this is kind of sometimes where you can read a bit between the lines a little bit, and you can see the amount of momentum that's coming in, and you can see that this area is in fact actually holding. So this is price coming in, and then what do we have? Last point of supply, price comes into it, tries to form a lower low, and then breaks up. So you may have got in straight away, right? When price comes back in here, it comes up, but then tries to fill more orders, within that kind of more of that extreme, and then eventually we start to go off. I was just looking at why price did spike a bit lower than this M1 zone here, right? Because we can see price did come a little bit lower, and if we look across, it came into this area of demand here, and I guess that's where the price is pulling back in. So this is your supply zone here, right? This buy to sell. Price comes in, it fails, it comes up higher. It doesn't quite close above the reaction point just yet, and then it pulls back a little bit to form this 15-second inside bar, and then boom, that's when the demand steps in, right? So that's kind of, logically, if you want to look at, those kind of logical reasons of why price came a little bit lower, right, into this sell to buy here, if you include the wick, right? But anyway, getting a little bit lost in the detail there, but yeah, I think just the major lesson, at least the one that I've taken looking back over the price action of today and yesterday, is definitely if you kind of see price taking the lows and taking the highs like that, just focus on the higher time frame trend a bit more, which of course 4 hour and daily were bearish, and then just maybe see, okay, I've been a bit too aggressive potentially, this is more of an obvious swing low and swing high, and just clean it up that way. So yeah, I think that's kind of everything I kind of wanted to cover. Obviously got this flip zone that I'll be looking at tomorrow, or you can refine it down to this candle, but at the moment my bias is still pretty much clearly bearish. I've obviously told you guys, we could break up higher and potentially come up to these regions, or even just push up higher in this daily zone, but the M15 has now switched bearish. So yeah, all time frames are now aligned ready for me to want to try and push shorts and try and target this weak low down here into the end of the week, and just look at any previous zones as potential reaction points and hedges to take long. If we do push up a little bit higher, I've got a couple of M15 zones, so this zone here, which I'll drag across, and then pretty much just the extremity up there. But like I was saying, anywhere within this daily box, right, just either wait for just a 15-minute change of character if you want to be aggressive, or just wait for the, right, if we break up, right, you can then, let's say we get a minor pullback, you could just wait for a M15 chock, right, and then come back in. You can look for the shorts, or you may just want to wait for the M15 to switch bearish, right, and then you've got all that confirmation again, and plenty of room to move, right. There's no need for FOMO whatsoever. So that wraps it up. I will obviously post the weekend breakdown, hopefully back to normal service. Hopefully start to feel a bit better, as this is dragging on a bit and a bit of a waste of time being ill, but yeah, hey ho, that's life. Hope you guys are feeling well and healthy and having a good end to the week, and I will chat to you on the weekend. Cheers guys.